So here are the differences between primary market and secondary market. So we have completed primary market and secondary market concept. Now let's see the difference between primary market and secondary market on certain basis. Number one is securities traded. So when we talk about primary market, what kind of securities are traded here? There is a sale of securities by new companies or further new issue of security by existing company to investor. So here the new issue market is there. So that is why the new companies issue the securities or the existing company issue the new securities in the primary market to the investor. And when we talk about secondary market, so there is a trading of existing security which is already there in the market. Then second basis is buying and selling. So when we talk about primary market, here is only buying of security take place in the primary market. Securities cannot be sold here. Why? Because the company is issuing the securities and the investors are buying the securities. So that is the reason, because new issue market is there. So only buying of security take place. Whereas when we talk about secondary market, so here both buying and selling of security take place on the stock exchange, because it is between the investor to investor. Investor who has already purchased from the primary market, now he disinvest the security or sell the security in the secondary market with the help of stock exchange. Then the company involvement. In the primary market, securities are sold by the company to the investor. Directly, company sell the securities to the investor or with the help of intermediary or the issue house. So that is the third point, company involvement. So in primary market, company involvement is there. When we talk about secondary market, so here company involvement is not there, because the transaction is between company is between investor to investor. Company is not involved at all in secondary market. Now, capital formation, because the money is going directly to the company from investor to company. So, here capital formation is there because directly money is going in the productive work of the company. The flow of fund is from the saver to investor. So, primary market directly promote the capital formation because money is going directly to the company. Whereas in the secondary market, when we talk about, because it provide the liquidity to the security, because with the help of this secondary market, the investor who is already having the security can sell it to another investor. So it provide liquidity to the investor. So it is a secondary market, indirectly promotes the capital formation. Then price determination. Here the prices of the securities in the primary market is determined by the management of the company, whereas in the secondary market the prices are determined by the demand and supply of the securities. Investor to investor transaction is there. So among the buyers and sellers of the investors, the price is determined. Location in the primary market, there is no fixed location, whereas when we talk about secondary market, so located at a specified places. So these are the major differences between primary market and secondary market.